Welcome to Wealth Talk, the podcast that unpacks the world of finance and helps you make better money decisions. In recent Bithumb news, the South Korean cryptocurrency exchange is planning an initial public offering, IPO, in 2025 that will see it listed on Kosdaq, a top South Korean stock exchange. This move would make Bithumb the first cryptocurrency trading platform in the country to gain such listing through an IPO. The decision to go public is a strategic maneuver by Bithumb intended to challenge current market leader, Bybit, and reclaim its market leadership in the increasingly competitive South Korean cryptocurrency industry. This ambitious move is a clear indication of Bithumb's continued drive to regain its position as a leading force in the Korean cryptocurrency exchange market. Bithumb's IPO announcement is indicative of the rapidly evolving landscape of the cryptocurrency industry in South Korea, revealing a shift in strategies as companies such as Bithumb look for opportunities to expand their operations and strengthen their market positions. In the latest development in the crypto world on Bybit News, FTX's bankruptcy managers have filed a lawsuit to recover $935 million allegedly fraudulently transferred to Bybit's investment arm and other entities ahead of FTX's bankruptcy filing. The lawsuit seeks financial restitution from Bybit and Mirana Corp., implicating them in the fraudulent transaction. This sends shockwaves through FTX's already complex bankruptcy proceedings. Meanwhile, Bybit is grabbing attention with the introduction of the Bybit card. The launch of this new feature coincides with the winding up of the Binance crypto card for customers in the European Union, positioning Bybit card as a strong contender. The card offers a new user bonus, positioning it as an enticing choice for crypto fans seeking a secure, user-friendly card in the EU. That concludes today's update. Keep watching Bybit News for more fresh updates and insights from the ever-evolving crypto industry. In the latest BlackRock news, the asset management giant is challenging the U.S. Securities and Exchange Commission, SEC, over the launch of Bitcoin and Ethereum exchange-traded funds, ETFs. According to BlackRock, there is negligible difference between spot Bitcoin and Ethereum ETFs and futures ETFs, hence, they argue that these should receive similar regulatory treatment. Unfounded distinctions are currently in play, says the company. Amid their push to launch spot market crypto ETFs, BlackRock's campaign comes during a surge in investor appetite for cryptocurrencies. By introducing such ETFs, they believe it will offer a regulated and transparent way for investors to access the crypto market, which will benefit both investors and the wider financial ecosystem. BlackRock is now urging the SEC to rethink its stance and treat spot market crypto ETFs on par with futures ETFs. This move would set the stage for a fresh wave of investment opportunities in the crypto space and could potentially alter the landscape of traditional finance. As the confrontation between BlackRock and the SEC ensues, the result will notably impact the future of crypto ETFs and the broader acceptance and incorporation of cryptocurrencies into the conventional financial system. In a related development, LPF Financial LLC, a leading independent broker-dealer, has escalated its stake in BlackRock Capital Allocation Term Trust. This suggests that LPF Financial sees potential in BlackRock's investment strategies and predicts a positive future performance for the Capital Allocation Term Trust. Stay tuned for updates on this ongoing regulatory clash. In the latest HSBC news, the world of cryptocurrencies has witnessed some exciting developments. Major banking institution, UBS, headlines have revealed they are now allowing their wealthy clients in Hong Kong to trade crypto exchange-traded funds. This move not only reflects growing interest among high-net-worth individuals in digital assets, but also signifies its increased acceptance in the region. In addition, HSBC has been actively participating in the fintech revolution. The bank completed its first-ever trades of tokenized physical gold using distributed ledger technology, DLT. Armed with blockchain, HSBC intends to enhance efficiency and transparency in the trading of physical assets. This marks another stepping stone to the digitization of traditional financial operations. Moving on to the foreign exchange market, the US dollar is showing strength prior to the release of US inflation data. This closely watched report is anticipated to give insights into the potential direction of the world's largest economy. Compounding the dollar's momentum, the Japanese yen maintains its position near a one-year low, further accentuating the negative sentiment surrounding the yen. Stay with us as we continue to monitor and report on these developments. I'll be here bringing you the latest updates in finance and technology. JPMorgan, a financial heavyweight, recently issued a warning that US cryptocurrency regulations are unlikely to soften, even in light of the recent legal defeats the US Securities and Exchange Commission, SEC, has suffered. This dampens the expectations of crypto fans who anticipated a more accommodating regulatory setting. Despite the SEC's courtroom losses in crypto-related cases, JPMorgan cast doubt on the possibility of sizable adjustments in the regulatory environment. The banking giant foresees the SEC maintaining its rigorous approach towards cryptocurrencies, potentially obstructing innovation and growth in the sector. Adding to the mounting concerns, JPMorgan also expressed apprehension about the recent surge in the cryptocurrency market. While the source have been accredited to the likely approval of Bitcoin spot exchange-traded funds, ETFs, the bank proposes that an overreaction might be present in the market. This alerts to the volatile nature of the crypto industry and prompts investors and market participants to exercise prudence and not solely rely on speculative particulars for investing decisions. Given JPMorgan's caution on U.S. crypto regulations and its doubtful stance regarding the recent crypto market bulge, investors and industry stakeholders will be keeping a hawk eye on further developments to glean a clearer view of the future direction of cryptocurrencies in the United States. In the latest Moody's news, we've seen interesting developments in the economic scene, most notably those revolving around the U.S. credit rating. Moody's has downgraded the U.S. credit rating, a move that surprisingly supported Bitcoin, raising doubts over U.S. Treasury's status as safe haven assets. These concerns have been fueled by fears of a bond market crash and an increase in default anxieties. Compounding the uncertainties, Moody's also revised the U.S. credit outlook to negative. This adjustment has amplified concerns regarding the dependability of U.S. Treasuries as an asset class. Following these setbacks, U.S. stocks are poised to begin the week on a downward trajectory, with heightened anxieties due to the Moody's rating outlook cut and escalating inflation worries leading to this slump. Despite the downgrade by Moody's, both stocks and bonds have remained relatively resilient. The overall positive atmosphere emanating from the Federal Reserve appears to overshadow the Moody's rating adjustment's impacts. However, a negative adjustment of U.S. credit rating did cause a slump in U.S. stocks. This decline was further amplified by anxieties over the burgeoning national debt. These developments highlight the global economy's intricate and interconnected nature. It remains to be seen how investors and markets will react to these changes surrounding the U.S. credit rating in the upcoming days and weeks. Therefore, we can expect an intriguing unfolding of events. Thank you for joining us for this episode on finance, where we explored the nuances of money management and provided insights to help you navigate the ever-changing world of personal and business finance.